Well, g'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this late Wednesday evening market recap. This is going to be applicable right through to the open of trade, which will begin on Thursday, April 6, 2017. The reason for this particular video and for me holding out is because I've been waiting for a signal on these markets to really legitimately give us some form of an idea as to where this market is going to move. Now, when we speak about ideas or at least forecasts, we really pay attention to, of course, some of the candlestick patterns showing up, the chart patterns, and how it is sort of influencing or interacting with some of the exponential moving averages, simple moving averages, and of course, technical indicators. Now, what we have been speaking about has been this sideways move, which again, we've been expecting to sort of play out for a month, if not 2 months. And really, since we've been building the structure up and around this resistance area, which is really a 2-day pattern at the beginning of March, it's what we call a tweezer top. And of course, the potential of what we call an exhaustion gap or a continuation gap, depending on the way price action decided to move. That was of the former. You can see we filled this gap, we bounced, we conceded a secondary lower high, we then printed a lower low, we've bounced, and as at the current juncture, as at the close on Wednesday, we do have what we call an engulfing type of candlestick on the S&P 500. What is very important about this candlestick is that we're seeing some pretty decent behind it. Again, it is engulfed the previous candlestick, and again we have this upper wick, which indicates a lot of selling pressure which was taking place during Wednesday's trading session. At one particular point, this candle more or less was a white long day candlestick. That changed intraday. The intraday trading turned from buying to selling, and that is what has left us with, again, this upper wick, this very pronounced upper wick, which is printing just shy of the swing high in mid-March. And again, this is subsequently lower than the print we established at the beginning of March. Now, if I go to the Dow Jones Industrial Average, you can see the same type of candlestick. This isn't really what we call an engulfing candle. It is, in many ways, a hybrid form of a shooting star. It is very, very bearish for the immediate outlook of the market. Having said that, we are not moving into open market orders on the short side, nor are we closing out of any long-term exposure to the upside, or even instigating opening new capital exposure to bullish trades as well. We're sort of sitting on our hands at this particular point, and we're waiting for the market to either prove to us that it wants to break above these resistance swing highs, or if it's going to crack this inflection point, which is building or has been building on these markets for a number of weeks. Now, going back to this rising 50 exponential moving average, it's very important that you understand this. Once we crack the 10 and the 20 and we break below this little swing low over here, the 50 will act as a magnet. And again, you can see price, it came down, it overshot it intraday on the Dow Jones. The same is true on the S&P 500. But again, we've been trying to see this temporary bounce, and this bounce has been trying to sort of build a little bit of grit for the sustainability in the long-term sort of continuation off from this rising 50. Now, as this has continued, price action has more or less moved sideways, and it wasn't until Wednesday's intraday session again where it was looking as though we were going to come back up and retest these highs. All of this, as at the close on Wednesday, has changed, and it's changed because of this particular candlestick just here. When we start combining this with the oscillating indicators as well, this is on the daily time frame. We're trying to, I guess, adjust from that 50 rising exponential moving average, but these are still very, very negative there. The MACD is still very strongly bearish. The RSI is still printing in negative territory. It's below the signal line. And the stochastics, although it is short-term bullish, it doesn't really give us a lot of hope or faith when we start to see, again, divergence between these three oscillators, or what we call sort of like a range of bifurcation. Now, if we continue the discussion and start looking at this on bigger fractals, you can see on the weekly time frame that we're starting to adjust. We're moving from overbought into oversold. So although on the daily time frame, you may be able to make the argument that, look, the stochastics is turning up, in and of itself, it doesn't really validate a bigger type of picture or what may be happening below the surface when we start looking into, of course, the construction of candlesticks, when we start looking into the construction of chart patterns and how we start to assess the psychology of traders actively participating in the market. When we start going out into bigger fractals, it really gives us a nice picture and a nice snapshot of where we currently are. Now, again, we are lingering up and around all-time highs, but this is across the board. It's not only applicable to the industrials, it's not only applicable to the S&P, but also, again, to the NASDAQ, but also the transportational average and the Russell 2000. So we're seeing it break down when we start referencing or talking about market breadth, which is what I'm going to do in due course. But going back to the weekly oscillating indicators, you can see on the MACD, this is very problematic. When we get these crosses in positive territory into negative, or when the negative histogram starts printing, or the positive histogram starts printing into negative territory, and we see the signal line cross, it is very, very bearish for the overall market. What makes this even more concerning is that when we go out to the bigger fractal on the monthly time frame, you can see again in the past, when we start to build these divergences, or when we start building multiple crosses, you can see how a market stagnates or it does reverse. Now, again, we're going to have to monitor this and obviously see what's happening at the current juncture. But when we start again taking these annotations off the screen and we start assessing monthly candlesticks, if we do get a bearish print on the monthly construction for the month of April, this is going to look very much so like an evening star reversal. And again, we're building very strong divergence, which has been happening over about a 2-year period. Again, price continues to make a higher high, but this subsequent print and this subsequent push with the MACD is still failing to register the similar type of outlook, or at least the long-term confirmation and legitimacy of this Trump-infused sort of mania buying, which has been happening over the past 3 months or so. Again, you can see the higher high, you can see the divergence forming in the MACD, you can see it pronounced on the RSI and also on the stochastics. When we start drilling back into the weekly, or more so a lesser sort of fractal, you can see these crosses. Ask yourself the question, are we overbought or are we oversold? And if this is some form of an adjustment, which direction do you think we are going to adjust? And that is really the major question which I pose for you at this particular point. Obviously, we're in the business of forecasting price action. It is what we do as market technicians. And again, what I would encourage people to do is to not really be active at this particular point. We have been expecting, again, some volatility, some whipsaws back and forth, some buying frenzies, followed by, again, some pretty strong sell-offs. And that's exactly what we're seeing. Rewind, again, Monday week, you can see the buying pressure which flowed into the market for 4 trading sessions. Now, of course, on Wednesday, we're starting to move in the opposite direction. This is all market noise. Anything between my two triggers here, 2,405 on the upside and 2,314 on the downside, sort of forget about it, but also assess and monitor and look at, of course, what is happening in terms of sentiment. Understand that sentiment is really what is driving this market. And if I had to make an educated sort of guess at this particular point, based on the sort of fractals of analysis and the different varieties of analysis that we can apply to financial markets, it's really looking as though it is topside heavy. Now, is that topside heavy on the macro sort of lookout or on the outlook, or is it more so on the intermediate or just minor level? We'll have to move with it when, of course, the markets decide to either break out or break down. But at this particular point, even if we continue the discussion into the NASDAQ, you can see how we've got 3 peaks here. We are registering slightly higher highs, but at the same time, when we start bringing up these oscillators, you can just see how strongly the divergence is forming on the daily time frame. You can see the MACD is just freshly printed again into negative territory. The RSI is nowhere near oversold. And again, the stochastics is registering divergence. You can see this engulfing candlestick pattern. So it is another formation of the shooting star candle that we saw on the Dow Jones Industrial Average. But this is telling us that if you're in bullish trades right now, especially with tech companies, there is potentially going to be some pretty strong selling pressure over the next couple of weeks, if not months, if we start to crack some of these really strong inflection points which have been building for about 1.5 months across the board. Now, if we continue the discussion into the transportational average, and of course I'm going to continue into the Russell 2000, we've been expecting this bounce. And again, this is what happens when we start to see breakdowns across the board. We flinch below it, we come back up and we retest old support as new resistance. We'll fast forward to where we currently are as at Wednesday. Look at the candlestick which is showing up right at my resistance level here at 9,203. The intraday high of this particular candlestick was 9,210. So we overshot it by about 7 points intraday. But what is most important is that we saw the sellers come back in. Now, when we speak about candlesticks, when we speak about chart patterns, it's all about, well, in what context or in what location are these candlesticks showing up on the chart? In other words, it's like real estate in many ways. It's all about location. Now, this bounce is showing up. We're getting, obviously, the candlesticks at the right location. And this has got me very concerned for the health of the equity markets moving forward. Again, on the daily time frame, it's looking as though we're starting to adjust from a relatively oversold sort of setting on the daily. But when we go out to the weekly, pay attention to this. We're getting confirmation across the board on the weekly sell signals, MACD, RSI, and the stochastics. When we go out to the monthly time frame, pay attention to this. You can see the stochastics moving back up into oversold. The RSI is adjusting already. And look at this divergence, which has been playing out since the beginning of 2015. This has been going on 2 years, which is huge when we start talking about divergence. Go back in time and give me another a historical example of divergence on a monthly time frame, which has gone on an indice for over 2 years. And I mean, I know for a fact that you'll struggle to find any. So this is a very important signal at the moment. We've got shooting stars over here. If I can just take the annotations off the screen and potentially zoom in for you, you can see the candlesticks which is setting up based on the monthly time frame, which is also very problematic for the market. You've got a shooting star, you've got another spinning top, you've got a bullish monthly candle which has moved nowhere, and again all of those gains again given back by the previous month's worth of trading, and here we are starting the month with another doji candlestick. These are all hybrid variations of reversal candlesticks which are showing up on the monthly time frame. Couple that with divergence, which I've already referenced on the previous markets, and again I was speaking like this in 2016, but it broke down when we started to break out and print fresh higher highs. All I'm trying to do for you right now is to at least alert you to the simple fact that these markets might be putting in an intermediate, a minor, or even a macro top. We'll have to discuss this in due course, but really what you shouldn't be doing right now is to be going out and buying this market, not until we get markets in agreement across the board, all right? And we simply don't have that. The NASDAQ was the one market which was looking to break out first. Obviously that hasn't happened. The Dow Jones Industrial Average is nowhere near the respective highs, printing up here just above 21,120. And again, the S&P 500 failing to break above 2,400 on the back of the Fed minutes released yesterday, or today being Wednesday. You can see this intraday reversal taking place. So it looks as though the markets are voting obviously in the way of price action, and it's not really liking the current rhetoric or what the Fed is saying. And again, it is rather problematic, which is showing up, or at least this is showing up on the technical picture as well, which again is what we sort of deconstruct and digest as market technicians. So I hope this is helping you. This is real-time, real-world analysis, and again, forecasts which I believe are going to come true. I'm not calling for a market top whatsoever at this particular point, but a lot of these signals are alerting us to a lot of downside potential across the board for these markets. You've got this showing up in Apple as well. You've got all of these doji candlesticks. Amazon has been one of those blockbuster trades above 869. Personally, I didn't get into this, but again, you can see the volume expanding, which is really supporting this move. Very interesting. We have what we call, again, some form of a hybrid shooting star, what we call a high wave spinning top, showing indecision. You've got weakness across the board in Boeing Airlines. You can see Baidu as well. You can see these rejections taking place across the board. Caterpillar, another rejection. You've got COP with this gap up, looking to fail in reverse, which is rather interesting. You've got CVX coming back up into this red box with this bearish counterattack candlestick. Very interesting on Wednesday. You've got Google, which has been very close to the precipice of breaking out, but it is coming back up into our red box, so it's looking at this particular point to be reversing. You've got Goldman Sachs, another engulfing candlestick, which is rather interesting. IBM, again, a dotted line, not taking the trade on the bullish side, but look at this. It looks as though it's about to crack that structural support level. You have Netflix, which is very close to breaking out, not interested in any bullish trades at this particular point. You can see why. And then again, Tesla at this particular point going absolutely berserk, overshooting our resistance area, but on Wednesday it looks to be reversing, which is rather unique and interesting in the context of this market, which is relatively weak at this particular point. So I just wanted to give you that snapshot. I am concerned at the end of the day, and I want to bring that to your attention. If you want to learn more, have a look at the Pro analysis class over the weekend, which is a recorded class which I post up online on Saturday morning. All the best, everyone, right around the world. Enjoy Thursday and Friday in the markets, and I'll be back with you over the weekend to break down this market in greater detail. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.